It's lack of bad trade news. And I will say this, Melissa, really, if we were, in my opinion, if we were going to have an all-out real trade war, I mean, the S&P 500 would be a lot lower than where it is. And I think it's properly saying that the probability is relatively low. It may have heightened here with the rhetoric we've had lately, but the market doesn't believe we're going to have an all-out trade war, and we don't think we will either.
You think we're in the clear, Scott?
I don't think we're in the clear. I think we're going to see more volatility. But volatility is good because I think the economic outlook is good. It's going to continue to be good, at least out until the middle of 2019. So we want our clients, I mean, we've been pounding the table on all these pullbacks. Get in here, get in this market, at the very least do some rebalancing here. And so that's been the message. I think that's where we want it to be. And I think that really we're going to finish a little bit higher than where we are right now at the end of the year. And I think the thing that's going to drive the market is the Fed, inflation, is wages going higher, is global growth going to slow? That's what's going to determine the market over the next 12 months.
Steve, what do you think? Do you agree with Scott Minerd? Is the market in denial when it comes to the trade, the impact the trade could have down the road here?
I don't think it's denial. I think we're at a point right now where when you look at the total impact of tariffs announced, you're looking at somewhere between 1/7 and 1/10 the positive impact from tax cuts, repatriation of capital, and spending stimulus. So I think it is appropriately having a little bit of concern as it looks at it, but not overreacting. Look, the middle of midterm years, particularly the summers, tend to be choppy periods, and we acknowledge that this is probably not the end of the trade concerns. But we think you're going to have an opportunity to buy this market at some point over the next couple of months and really appreciate meaningful upside from there. We're sticking with our 3,100 target 6 to 9 months out for the S&P.
You know, my notes, Steve, indicate that you think that the possibility of escalation into a full-blown trade war is casting a fog over the market. What fog?
Well, I think that's I think there's a concern, and it's not just in the United States. I mean, like I said, it's relatively minor when you think about the U.S. Trade's only about 14% of our economy.
Yeah, as you point out, it's not minor in Shanghai.
It's not minor in Shanghai, and that's the point. The question is do the Chinese get so thoroughly overwhelmed that there's spillover effects? We don't think there will be, but we think that that's something that the market's going to contend with over the next couple of weeks.
So, Scott, looking at earnings season, it was just last earnings season, everybody was saying that would be a catalyst for the markets, and it wasn't a catalyst in terms of breaking the markets out of its trading range. Is it going to be different this season around?
I think this is earnings season this year. It's a confirmation process, and we're going to see some really good absolute numbers. But really, to be honest with you, I think the market's starting to look to 2019. That's why stocks aren't a heck of a lot higher than where they are now, because we're not going to see anywhere near the growth rate in 2019 that we're going to see in 2018. So does the market want to see some absolute good numbers every quarter this year? For sure. But believe me, I think there's a wide, you miss it overall for the market, you miss it by a percent or two one way or the other. I don't think it's going to make that much difference. It's a confirmation that things are good, and then we need to look toward 2019 to see how much longer that's going to last.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.